What's going on, investors? My name's Emmanuel, and we have some incredible breaking news regarding the USPS contract, which completely changes everything. We also have some breaking news regarding Workhorse's C-Series electric vehicle delivery trucks and its current achievements. And I believe a combination of both these new developments alongside the recent price dip resulted with Cathie Wood from Ark Invest, which is arguably the best performing growth ETF for over the last 2 to 3 years, took full advantage, and on the 24th of September, they loaded up purchasing close to 90,000 more shares of Workhorse stock, which significantly boosts Workhorse ranking in their ARKQ fund. So in this video, I will show you the recent discovery of the USPS contract that none of us were actually aware of until now, and also how I think this will impact Workhorse going forward, especially if we do win the contract. I will show you exactly how many shares of Workhorse that Cathie Wood's Ark Invest bought on the 24th of September, which is literally just yesterday, which is incredible. Also, what this means for their Workhorse holdings. Like I did mention, we do have breaking news regarding the amazing achievements of the C-Series delivery trucks, so we will touch on that. And lastly, I'll finish off with a few tips from my mentor Peter Lynch about how to handle large volatility in the market, because the reality is Workhorse is an incredibly volatile stock, and I think we've all actually experienced that firsthand this week. And I do know a few investors who actually panic sold out of their position simply because they couldn't handle the volatility. So with that said, before we jump into the video, don't forget to destroy the like button because it will help get this video out to more current and future Workhorse investors. Also, if you are new to the channel, then hit that subscribe button to stay up to date with all my stock analysis content, as well as any major stock related news. So with all that said, stay locked in and let's dive into the video. So on the 24th of September 2020, Cathie Wood's ARKQ fund purchased a total of 86,300 shares of Workhorse stocks, which equates to 0.31% of that fund. Now, I do also want to point out that they did indeed purchase some more Tesla shares. They purchased 55,000 for the ARKK fund and a further 19,000 for the ARKW fund. And this alone is a first-class demonstration of how you become greedy when others are fearful. I mean, just think about it for a second, right? On Monday, the 21st of September, Workhorse ended the trading session down, 2.2%. Again, that's a minor, nothing to see here. Let's keep it moving. However, Tuesday, the 22nd of September, Workhorse crashed over 7% in that trading session. And I believe it actually crashed a further 4% in after hours trading. And that definitely did start to raise a few eyebrows. And it actually certainly did mine, even though I don't have many eyebrows. Then the big one came. Wednesday, the 23rd of September, we all know what happened. I mean, Workhorse crashed a further 15% Wednesday's trading session, signaling a massive sell-off, which was driven by fear and panic, as well as day traders closing their positions, etc. That caused constant selling pressure on Workhorse, which drove the price down from $30 a share all the way down to a low of $21.30 a share on Thursday. And what does Cathie Wood and Ark Invest do in the midst of all the panic and the fear? They check to see that their buy thesis is still in place, and then they say, "Thank you very much, fearful investors. We will have 86,000 more shares if you don't mind, at a much cheaper price than it was at $30 a share." I mean, it's just excellent. A pure masterclass on how to take advantage of a massive dip, which was fueled again by nothing more than fear outweighing greed. And this, of course, now means that Workhorse has moved up in the ARKQ ranking, now sitting pretty in 14th position, and that's up from 3 places just from yesterday. All right, now, besides Ark Invest buying the dips, let's draw our attention to the new major development, mainly the reason why you're here. And it's regarding the size of the USPS contract. Now, I have to give props to you guys in the comment section, but in particular, Prophet John. He commented that the USPS contract could be worth 20 billion instead of 6.3 billion, according to a Mahindra file. Now, If you're not aware, Mahindra were, I believe, one of the final 3 contenders to win the USPS contract, but they dropped out because they simply didn't have enough cash to be able to fulfill the potential orders if they won the contract. And they also said that they had to make revisions to their investment plans. However, when they were named as part of the finalists and still in contention, they filed a press release statement which said, "It was announced today that Mahindra has advanced to the prototype stage in the competition for the United States Postal Service Next Generation Delivery Vehicle Contract." That's NGDV. Now, here's where it gets really interesting. It goes on to say that the Postal Service NGDV contract calls for the supply and support of up to 180,000 new postal vehicles over the course of 20 years and could approach a potential worth over $20 billion. Again, I repeat, the USPS contract could generate over a 20-year period a value worth over $20 billion. Now, let that sink in for a minute. So we all thought that the USPS contract was worth $6.3 billion. I mean, you had multiple media outlets that reported it to be up to 180,000 vehicles, over a 5 to 7 year period, worth $6.3 billion. However, Mahindra, who you could say was an insider on the USPS contract, I mean, they were in the final 3, so they would have received a more accurate briefing and also more details regarding the requirements needed to be able to fulfill the contract. And as a result, Mahindra pulled out. But they left us with a huge revelation. The contract is not over a 5 to 7 year period, like we were all led to believe by the media. It is in fact over a 20-year period. And to top it off, if Workhorse wins, if they do win the full contract, it means we are getting our hands on $20 billion. I mean, I am completely mind blown by this. I don't even know what to say at this point. I mean, that would be incredible for Workhorse, especially with a market cap that's currently sitting at just $2.3 billion. But remember, we already know that the Hitachi deal would streamline production, especially with the Hitachi America's Lumada technology. And as well, capital is also readily available through the Hitachi Capital America Corp's input into the deal. In addition, we are also currently hiring more personnel. I mean, we are making all the right moves that we need to be making to ensure that we are able to facilitate this contract if we do win it. And if we do secure the contract, that's a $20 billion contract. And you know what, investors? It's actually starting to make sense as to why Hitachi, a huge, massive conglomerate, would actually want to strike a deal with, little old Workhorse worth $2 billion market cap. It's because there's $20 billion on the line. I mean, guys, look, this has completely just changed everything. It's unbelievable, but it's also incredibly exciting at the same time. And let's just say that I personally cannot wait for the market to open on Friday. It's gone. I'm done. Oh wait, there's more. A new report which was published by Yahoo Finance, and on Thursday the 24th, Workhorse C-Series all-electric delivery trucks achieve premium range for last mile delivery. Now, the article also states that Workhorse today announced that its C-Series all-electric delivery trucks has achieved an improved and industry-leading range. New data from the tested showed that Workhorse's 2020 model year C1000's extended range achieved a maximum of approximately 160 miles per charge under urban situations. This is absolutely crazy, investors. Think about it. Workhorse now has the industry-leading range for any last-mile delivery electric truck. And I really don't know what to say anymore, to be honest, at this point. But the CEO, Dwayne Hughes, actually added, and he said that achieving a 160-mile range has been a goal of ours and the last-mile delivery sector at large for quite some time, as it significantly expands the addressable market for our solutions. He also adds, As the only purpose-built last-mile EV delivery truck with a light-weighting design, we are competitively positioned to be more efficient with a smaller battery pack configuration compared to other EVs and can handle the stop and start nature of the last-mile delivery more effectively than traditional industrial combustion engines. And on that point, I do actually want to share with you the current situation that's surrounding the USPS delivery trucks, because the Business Insider published a recent article exposing that hundreds of USPS delivery trucks are actually catching fire as they continue to outstay their 24-year life expectancy. And I believe that further increases the urgency of the USPS contract deal to get over the line and just make the announcement already. So investors, this is all incredible news, and I am even more excited about the current and future prospects of Workhorse. It's incredible, and I actually feel somewhat proud of what the company are currently achieving. Now, right before we wrap up the video, like I said at the start, I do want to speak on volatility, especially regarding Workhorse, and if you are a Workhorse investor. Peter Lynch said, "When you sell in desperation, you always sell cheap," which I think re-emphasizes the point that long-term stock market success requires a certain detachment and also a certain level of tolerance for short-term pain, which is caused, of course, by high levels of volatility, stock going up, stock going down, all right? The most essential organ in investing is not the brain, it's the gut, okay? With that said, investors, I hope you found this video incredibly informative and also really exciting, especially if you are a Workhorse investor. But make sure you do your own due diligence before you decide to invest in any stock. I've said it before and I'll say it again. I am not a financial advisor, so please view my content as purely educational and not investing advice. And if you do want to learn about investing in stocks, then there are some useful links in the description below. Plus, my broker Trading 212 will send us both a free share if you sign up using the link in the description below. So with all that said, guys, don't forget to smash the like button if you haven't already. Hit the subscribe button and the notification bell if you want to see more content from myself. Thank you so much for watching. I truly appreciate every single one of you, and I will catch you in the next one.